So, the market took a heavy hit last night, a sudden and sharp crash that left many investors frozen in fear. BMNR dropped by nearly 11%, and across social media, panic is spreading like wildfire. Everyone's asking the same question: is this the moment to sell everything and run? But the truth might be very different from what fear is making us believe. Today, let's take a deeper look into what's really happening, how top analysts like Tom Lee view this crash, and why major investors might actually be seeing this as a moment of opportunity, not disaster. Welcome to Big B USA Stock, your daily source for U.S. stock market updates, trends, and insights. Stay ahead, stay informed. Subscribe now for daily update. This video is for educational purposes only. It is not financial advice. First, let's talk about what caused this storm. The tension between the U.S. and China over trade tariffs has been escalating once again, with discussions of 100% to even 200% tariffs floating around. But here's the interesting part. Only a few industries are truly affected by these tariffs. The rest of the market is reacting emotionally, a classic case of panic overshadowing logic. This kind of overreaction often creates temporary chaos. But for smart investors, it also opens a window to grab solid assets at a discount. While scrolling through social media, I came across a clip from a market expert who said something powerful. Today's fall is actually healthy. His reasoning? The VIX, the fear index, spiked by nearly 29%. Historically, whenever the VIX jumps this much, it often signals that panic has reached its peak, which means the market is likely to stabilize or bounce back soon. In simple terms, fear has exploded, and when fear peaks, recovery often follows. Now, let's turn our eyes toward the crypto side of things. There's no denying that this is one of the biggest crypto crashes we've seen in a long time. Nearly $19 billion was wiped out in just one sharp move, even larger than the infamous Luna crash. That's massive. But this crash also brings another question. What happens to stocks like BitMine, BMNR, and MicroStrategy, which are heavily tied to the crypto world? Here's the key point. When we buy a stock, we're not buying a chart, we're buying a business. Every business has ups and downs, and its stock price often reflects short-term emotion, not long-term value. So if the fundamentals of the business remain strong, then this chaos might not be a signal to run, but a signal to prepare. As Warren Buffett famously said, "Be fearful when others are greedy, and be greedy when others are fearful." And right now, the market is drowning in fear. Now let's talk about what Tom Lee recently said in his CNBC interview. According to him, this market decline was not only expected, but actually necessary. Since April, the market had already climbed around 36%, so a healthy correction was due. Yesterday's crash, though the biggest in the last 6 months, is what he calls a flush, the market's way of resetting itself and clearing out weak hands. Tom Lee pointed out something fascinating. The VIX saw a 1.229% spike, which is historically the 51st largest volatility jump ever recorded. This means investors are desperately seeking protection, and that behavior, more often than not, marks the formation of a short-term bottom. When fear peaks, smart money usually starts positioning for the rebound. According to Tom Lee, if someone asked him whether the market will recover within a week, his answer would be a confident yes. He expects a potential bounce of up to 60 points, assuming there are no major changes in economic structure or government policy. In simple words, unless the economy itself breaks, this dip is a buying opportunity. He also shared the 3 pillars behind his optimism. Number 1, AI growth. Artificial intelligence continues to drive innovation and profits across industries. Number 2, blockchain expansion. The digital asset revolution is still in motion, despite volatility. Number 3, Federal Reserve policy shifts. The easing cycle by the Fed could fuel renewed market strength. Another point Lee made was about timing. Since this drop happened before a long weekend, many traders tend to close their systems early, increasing sell pressure. But that doesn't necessarily mean the market is broken. In fact, history shows that markets rarely bottom out on a Friday. Recovery usually starts the following Monday when the panic cools and logic returns. So, to the BMNR community, here's the takeaway. Don't let short-term noise shake your long-term vision. Market crashes are emotional tests. They separate the impatient from the wise. If you truly believe in the business behind BMNR, then short-term dips can be a blessing in disguise. Take a deep breath, enjoy your weekend, and remember, panic never builds wealth, patience does. And before you go, make sure to subscribe to our channel and join our WhatsApp community where we're soon launching a free fundamental analysis course exclusively for our followers. This market may look scary, but for those who understand the bigger picture, it's not the end, it's the beginning of the next big opportunity. This was Big B Stock USA, bringing you the latest updates from the US markets. Don't forget to like, share, and subscribe for more.